right now. David Stryzewski, CEO of Sound Planning Group, is with me. So we're getting some of the Fed minutes from the last meeting. We had two dissenters, which is very unusual. We haven't seen that in decades. Two that wanted to have cuts, rate cuts. What say you about what the Fed is dealing with at this point?
I mean, the Fed is dealing with kind of a rock and a hard place moment. You know, whether we're talking about inflation or we're talking about jobs, he's kind of at the Arthur Burns moment. Do we cut right now and risk inflation going much higher because the markets still are strong and we haven't really seen things ultimately break? Or do we kind of risk the rates being higher for longer and we see the big challenges that are taking place right now in housing, how this is taking place right now amongst businesses that are having a harder time finding capital today? And so I think that, you know, he is going to end up cutting, but it's going to be basically based on more emergency type of measures. And I think we'll probably see at least a full point by the end of the year.
Full point by the end of the year. I mean, you know, Scott Bessent's been pressing for a 50 basis point cut in the next meeting on September 17th. However, you know, at this point now, we don't know what they may or may not do, particularly if they're concerned that tariffs will bring on inflation.
Well, yeah, and obviously Powell's not really going with the Bessent-Trump playbook at this point. He's kind of doing his own thing, and he is trying to be data dependent. So I do think that just like you said here a moment ago, the data is not showing up very strong in employment. The data is not showing up very strong in the PPI side of things. And so there are some real challenges, I think, ahead of us. There are some things that could change, but there's also some positive things. So I don't know. We got a mixed bag.
You know what? It's so over the last, year and a half, 2 years, we talked about soft landing, hard landing. The recession that we were waiting for, there was a rolling recession. Well, we have a real recession, depression, stagflation. Are any of those appropriate now?
Yeah, I mean, we kind of are seeing more of a stagflation, but I think it can ignite and we can see some growth. I think that you're probably going to see in September and October, when kind of like the bankers come back, we're going to see real numbers start to show up. You know, we're also about to get an unemployment print, and we've got a new person at the BLS right now. And so that's kind of an interesting one to be watching. You know, are we going to get different types of numbers? What are these employment numbers going to be looking like? Because, you know, I think that, you know, things are deteriorating underneath the scene, maybe a little bit more so. And actually, one of the things that I was you know, having a conversation about the other day was, why has housing remained so strong? Because that's typically an indicator of, like, it's the last thing to go before an economy does. Housing right now is at its most unaffordable point, and the reason for that actually is because of immigration.
Right.
We had 10 million people come into our nation. They have to live someplace, but now that there's deportations occurring, you're going to see the tide come out in some of that. And I think that you're seeing a real softening in some very key markets that looked really, really, really healthy and strong maybe 6 months ago. And so there's some attrition there. So there's a lot of change with tariffs. There's a lot of change with deportations. Change. I guess that's the theme of the day.
And that'll be a change for the labor picture too, but for housing, without a doubt. And you still have an affordability issue, and that pricing is so high. And also mortgage rates haven't come down much. While they did tick lower recently, the concern still is that you have a hefty mortgage, a high price point to buy this house, and your insurance is probably expensive too. Last time you were on, you liked certain names more than others. One that you liked was Tesla.
Yeah.
Tell me more about Tesla now today.
Okay, you know, Tesla's an interesting company. They're more than just cars. That's why they don't price the same way as Ford Motors, as an example. Really what you're getting is AI, and you're getting a tech company. Now, I personally believe that Tesla's positioned so incredibly well for the future as a result of Starlink and the fact that they can actually bring real data down to earth. If you want autonomous vehicles and robo-taxis and robots, you're going to need that real up and down, you know, that's able to go anywhere. And if I can be really honest with you, the conversations I'm having with futurists and people that are actually in the world right now creating this technology, they believe that robots are going to be some of the most disruptive parts of our economy over the next 3 and 5 years. Because just think about this. If you got a robot that could do some work for you and maybe make $3,000 to $5,000 a month, that might supplement your income, give you some free time to do other things. And so it kind of changes the way that we might even look at the world and do life.
So, I mean, you were talking about real data coming down to earth, that you don't necessarily need Wi-Fi in order to get some of your data for your Tesla. Is that what you mean?
Yeah, exactly. So Starlink's everywhere. I mean, I've got a Starlink device. I went camping with my family earlier this year, set the thing up in the middle of nowhere, was able to still get something and watch a video because the kids wanted to do that. But no, it gives you the ability to do the up and the down so well, but also their AI chips are going to be universal from the cars to the robots, the data centers, and ultimately that is going to set Tesla up, in my opinion, for a more comprehensive way of approaching the future. Is AI is going to become not just artificial intelligence, but alternative intelligence, and we're going to see more intelligent ways of doing things, not just by prompts, but with specific missions.
I think you thought this stock could rise big time. I think you said something like 50% upside. Is that still the case?
Absolutely. So what we're looking for is the disruptive technology. Those are the things that are going to be the game changers for this stock that's going to take it to the next level. But if you look at this stock, it has just continued to change and transform and change and transform. I will say, though, that I am cautious about the valuations of the market right now. There's a number of things that could go really wrong. In fact, a lot of the AI leaders, NVIDIA as an example, rose so quick, 4.5 trillion right now. I'm a big fan of that, but here's the reality. What goes up also can come down, and corrections are healthy. Pruning is a healthy thing, and so I'm not afraid of a 10-15% pullback. I don't like the 30, 40, 50. I don't like when we get into systemic challenges, but I think that we could see some changes in leadership on the AI side, and then that's where my picks and shovels play kind of comes in.
I bombarded you with the Tesla story because it was something that was intriguing last time we spoke. Are there other names that you like right now that you would throw into the hat for? I mean, Tesla, you said, had 50% upside, so that was definitely an aggressive pick.
Sure.
Other names that you like a lot right now?
Absolutely. So I think that metal miners are probably the most important thing to be understanding. See, when we are doing all this CapEx spending, we're looking at, copper connects all the electricity, steel erects the buildings, and we've got silver that connects the semiconductors. You want to go small, you got to go silver. You need metal miners. You can't just print this stuff. And the actual ratio of silver to gold is 7.5 to 1. I believe silver has the greatest potential within this, but I like buying just like an index because you can leverage someone else's expertise. We've got our own portfolios and how we do this, but metal miners are up 60% on the year. I think they're probably going to continue to lead the next 3, 5, and potentially even 10 years of all sectors of the economy.
Wow. 3, 5, and 10 years.
That's correct.
So a long way to go for those metals and miners. Dave, it's great to see you always. Thank you so much, and I appreciate you being here on such a big day, too, for the Federal Open Market Committee minutes to digest that as well. David, great to see you. Thank you, David Stryzewski of Sound Planning Group.